Every time you hire an independent contractor to help your business or nonprofit scale, your legal risk grows exponentially. In 2026, the difference between a successful scale up and a devastating misclassification audit is thinner than ever. Today, I'm breaking down the ever changing legal tests that you need to know when considering independent contractors and why making assumptions about the differences between contractors and employees might just be a ticking time bomb for your business or nonprofit. If we haven't met before, my name is Maritza Shea Nelson, and I'm a small business and nonprofit attorney. I help entrepreneurs, founders, dreamers, and innovators pursue their passion without worrying that legal stuff, like the difference between a contractor and an employee, might come back to bite them. As outside general counsel for founder led businesses and nonprofit organizations, my job is to look at the regular business of your business and ensure you have the foundation in place to support your biggest ambitions. Working with these types of organizations, I can tell you that lean scaling is the goal for everyone. You hit a revenue milestone, you land a major contract, and all of a sudden you need good, qualified workers who can hit the ground running right now, not next quarter. So you bring in specialized help and you decide that you'll make them 1099 contractors. It feels smart, it's fast, and it keeps your overhead low. But here's the reality. Lots of small businesses get away with misclassifying workers as 1099s. But as you scale up, the more you rely on 1099s, the greater the risk becomes. If you're using contractors for work that is integral to the core of your business, as in they're doing the what that you actually sell, you're a ticking time bomb for any federal or state agency audit or for a disgruntled worker, especially a disgruntled former worker, making a huge legal case out of what you thought was a simple convenience. In Ohio, as is true across the country, there isn't just one single magic definition of an independent contractor. Instead, how you classify your workers has to survive any number of tests. At the heart of Ohio law, we look at the right to control. Ohio courts and many of the agencies like the Ohio Department of Job and Family Services, the Bureau of Workers' Comp, the Department of Tax, they're all going to look beyond the labels in your contract to the actual facts and circumstances of the relationship. The critical inquiry or the critical question is whether you, as the hiring party, have the right to control what we call the manner and means. In other words, how the work gets done, not just the final result. So the key factors that are going to weigh in favor of that worker's an employee and not an independent contractor when we're looking at this manner and means analysis are going to be things like control over the details. So if you're directing the quality of the work, the details such as how it gets done, the specific hours that are worked, you're providing training or close supervision, that's an employee. We're going to look at resource selection. If you provide the materials, the tools, the equipment, you provide dedicated workspace for the project, all of those things are going to lean towards that worker being an employee. We'll look at the method of payment. Now, granted, this isn't true in every industry, but oftentimes if you're paying by the hour or you set up a weekly or monthly payment rather than a flat fee that's based on completing the project or completing a particular milestone in the project, that'll be used against you and that worker could be treated as an employee. We'll look at integration. So if the services that the contractor is performing are integral to the core of your business model, right? They're at the very heart of what it is that you sell or the services that you provide, that's more likely to be an employee. And we'll look at the economic reality. Is the worker economically dependent on your business or nonprofit, as opposed to actually being in business for themselves? So if that worker doesn't advertise to the public, they don't have their own EIN number, they don't maintain their own business bank accounts, that's not a contractor, that's an employee. So ultimately, if you find yourself telling the worker what to do, when to do it, where to do it, how to do it, you're providing the tools and equipment, you're training them on how to do it, you're giving them specific instructions, you probably have the right to control the worker, regardless of what the paperwork might say. And that's going to signal an employment relationship. Now, when a worker files for unemployment or makes a workers' compensation claim, technically the test is a little bit different, and this will also be the trigger for an audit. So, in Ohio, agencies like the Ohio Department of Job and Family Services frequently use a 20-factor test for unemployment claims. And it was originally meant for construction workers, but it's kind of become a standard reference point when ODJFS gets involved. Now, I'll drop the 20 factors on the screen instead of reading them to you because I don't want to bore you with all of the legalese. The core of the test is going to be very similar to what we see in all of these tests. Ask yourself, is the worker integrated into your daily operations? They might be an employee. Do they have an ongoing, continuous relationship with you, or is this more project based? An ongoing relationship tends to indicate employment, not independent contractor. If the success of your business depends appreciably on how that quote unquote independent contractor performs, the state is going to lean towards calling them an employee. And remember, in Ohio, like most states, these agencies share data across the board. So one finding by the Bureau of Workers' Comp might trigger a chain reaction of audits across ODOT and ODJFS. And these agencies don't just look at one worker. They don't just look at the person that came in with the complaint or tried to file for unemployment. They're going to look at your entire workforce when they come calling. Now, when it comes to wage and hour compliance, the test changes a little bit. The federal standard, what we find in the Fair Labor Standards Act, uses the economic realities test. And it's critical for Ohio business owners to understand that test because Ohio's wage and hour law follows that federal interpretation. So this means that test is going to be the standard that you need to meet for both federal and state level wage and hour compliance. Unlike the right to control analysis that we talked about in the beginning that focuses purely on supervision, the economic realities test focuses on that fundamental question, is the worker truly in business for themselves, or are they economically dependent on your business or nonprofit? So the courts and regulators, when this test comes up, primarily balance 6 factors. And again, you're going to notice some commonalities here because there's quite a bit of overlap among these tests. They're going to look at the degree of control. Do you control the manner and means that we talked about earlier by which the worker performs the services instead of just dictating what the final result should be? Does the worker have an opportunity to make a profit or possibly even lose money? Do they stand to make more because of their managerial skill, their judgment, their foresight? Or could they potentially stand a loss on their investment if they maybe misprice the project? These tests will also look at the relative investment. So how does the worker's investment in their tools, their equipment, their facilities compare to what you're investing in the worker? They'll look at the skill required. So does the job that you're bringing in this special contractor to do require some special skills, some initiative, some business acumen? Or are we just looking at routine tasks, right? Special skill tends to suggest that the worker might actually be in business for themselves as opposed to just being your employee. We'll look at how permanent the relationship is. So if this is an open-ended thing where you can fire them at any point in time or they could quit at any point in time, that tends to suggest employment. Whereas if this is a project-based contract, that leans more heavily in favor of the worker being an independent contractor. And like the other tests, we're going to look at whether or not the work that's being performed is at the core of your business, or is it integral to what your company does, or is it merely incidental? So for example, if you're a marketing company and you hire a worker to put together websites, that's at the core of your business, right? That tends to suggest that they're an employee. If you hire somebody to come in and do the QuickBooks in your marketing business, well, that's not at the core of your business. That's not the service that you provide. That might make that person more likely, not always, but more likely to be an independent contractor. So, if the weight of these factors shows that the worker is economically dependent on you for their livelihood, they're an employee under federal and state wage and hour law, no matter how you describe it, no matter how you try to slice it, and no matter what that contract says on paper. And then we come to the problem of, especially since the pandemic, everybody's workforce has scattered beyond the state. So when you start to look beyond Ohio and you start thinking about bringing in remote workers, things often get even more restrictive. About half of the states have adopted some version of what's known as the ABC test, which is the strictest version of these tests that you'll encounter. The ABC test assumes that the worker is an employee unless you can prove otherwise. And there are three specific things you have to prove. A is the absence of control. The worker has been and will continue to be free from your control or direction when it comes to performing the work. So you're not telling them what to do, when to do it, where to do it, and how to do it, and you're not going to. B, a business disconnect. The work that worker is performing is either outside of the usual course of your business, or it's performed entirely outside of your place of business. Now, I won't get into the details of, which states, rely on one or the other and which states say it has to be both. But just know that when the worker is doing something that's a core of your business and or they're working at your business location, you're not going to be able to satisfy this test. And C, a customarily independent business. So is the worker customarily engaged in an independently established trade, occupation, profession, or business? If not, they're an employee. So when you're hiring remote workers, don't just think about where you are. Don't just think about Ohio law and what federal laws apply. You also have to consider the jurisdiction where that worker is located. So, to protect your business or nonprofit as you scale, there are several steps that you can take today. First, stop paying contractors through your payroll system. They're not employees, they don't get paid by payroll. They should be paid through your accounts payable after they've sent you an invoice for their services. Second, take steps to actually confirm their independence. Do they have their own tax ID number? Did they supply you with that Form W-9 so that you can issue them a 1099 at the beginning of the year for tax purposes? Do they have their own business insurance? Do they advertise their services to the public? Do they actually have business expenses? If you're their only client and you provide their laptop and the software that they need to do the job, they're economically dependent on you. They're not a contractor. That dependency is the hallmark of an employee. The reality is that misclassification can cost you thousands of dollars per worker in back pay, unpaid taxes, and penalties. And as the owner of the business, you are personally liable for that money. So if you've reached a point where you're shifting from being a solopreneur to actually hiring a team, or you've crossed that 4-employee mark that we'll talk about in some future videos, you need to get your legal ducks in a row before trouble finds you. I often tell people that hiring independent contractors is a lot like speeding on the interstate. Not everybody gets caught, but if you do, there really is no excuse. My clients range from startups to growing businesses and nonprofits with nearly 100 employees across a wide variety of industries. If you're ready to audit your contractor strategy and make sure your growth is sustainable, visit msnlawoffice.com today to schedule a consultation. And now that you've got your contractor strategy audit underway, you need to ensure your overall business structure doesn't undermine your tax efficiency. If you're operating as an S Corp, one wrong move can jeopardize your status. I'll see you in this next video where I break down S Corp compliance, the single stock rule, profits interest, and holding company mistakes that could jeopardize your tax status. I'll see you there.